Joined by Ross Gerber. We love when he's here, President and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, I love when you come on. I mean, first of all,
Thanks.
We had a great discussion before the big move where you came on and said all things positive for Tesla, and then the move happened. So I want to give you the proper credit. Now what?
Hey. Well, you know, it's amazing how the sentiment has shifted positive for Tesla from how negative it was 8 or 9 months ago. And we have clients like calling to want to buy at, you know, 850, 900. And it was the same clients that were scared to death at 200, you know. And so that's usually a contrary indicator of, you know, what you should be doing. And so, you know, the reality is we're hoping Tesla pulls back to a more reasonable level to add to our position. We have a very big position in Tesla, so we're not that worried about getting in further. But if you're a new investor, it's a tricky time because, you know, Tesla's now in ramp up stage right now with China and the Model Y launch, and Q1 is going to be messy with coronavirus and who knows how many other, you know, factors that you want to factor in for Q1 that make Q1 tough. So I think it's time to be patient and wait for a better entry point for Tesla.
Well, it didn't hurt to also get that positive report from Consumer Reports, right? Like the best electric vehicle. Were you surprised when you saw that? Because that's a nice feather in the cap for Elon Musk, right?
Yeah. No, I was more surprised when Consumer Reports like panned the Model 3, and I was like, these people have lost their minds over there, but it seems like they've found their minds. But I drive the car every day. It's the best car on the road. I could be driving a Ferrari right now, and I choose the Model 3 because it's, I think, the best car on the road. You can't match the technology. And I was thinking about the thought of buying a Ferrari and using gas again, and I was like, no, I'm never going to use gas again, you know? And so Tesla is in a league of its own right now.
Okay, well, I hope you have both because I don't want you to miss out on a really cool Ferrari. That being said, $834 is the current price. There is the technique of buying in the 750 range, selling at 900. It is the technique that people are using over and over and over again. It also goes the other way. As it goes above 900, they begin to short it. What are you hoping for? I know you have a lot invested, so where your money, you know, you put your money where your mouth is. We're at $834. Now what?
Well, I think, once again, I think Q1 is hard, and I think it's going to put pressure on the stock as bears jump on, you know, the numbers and say, oh, look, they're back to cash burn again and all the stuff they can make up. But this is the quarter they're investing into a real big ramp in the Model Y. And, you know, it hit me the other night. I'm like, this Model Y is going to sell like crazy. It's going to be an enormously successful product, and it's in launch mode now. And you know, barring that coronavirus gets under control in the next 6 months, China will be an amazingly good market for Tesla. Their factory is up and running. It was the first factory up and running of any major company in America. You know, clearly the government in China is trying to benefit Tesla there. So you know, Tesla, if you think out 6 more months into Q3 and 4 of 2020, is going to just have amazing numbers. So I think you look for any pullback as an opportunity to add to the stock, but I do think it's pricey still.
Okay, so tell me, so you think this is the best growth company in the world?
Yeah.
So, I mean, this very much could go back $100. I mean, this thing moves $50 easily anyway. So if it moves back into the $700 range, are you going to buy more? And tell me about this, how it's the best growth company in the world.
Well, I'm kind of hoping it moves back to the $500 range, you know. I know short-term thinkers care, oh my God, I'm down. But, you know, I'd like to see a nice retracement in Tesla so I can really get in at a more reasonable valuation again. But, you know, once again, I'm heavily invested in Tesla, so I don't feel that big of a need to worry about that. But I think if you don't own Tesla, you should look for opportunities, just add a little to your portfolio, even at these higher prices, just so you own the stock. But I would be very cautious, and I would dollar cost average and put in money over time, because I do think we've got a little bit of a challenge over the next couple months between coronavirus and Q1. So, you know, you dollar cost average over the next 3 to 4 months. But when you look at what's happening in Giga, Germany, where, in the next 2 years, they'll have another gigafactory up in Germany, and they're just ramping China. So in 2 years, China will be full bore and Germany will be like ramping. And now let's talk about solar and batteries for a minute. And I think the solar business for Tesla is about to just completely take off. I mean, we think there's 40 million homes in America that could get solar, save money doing it, and help the environment. And Tesla's going to be one of the main drivers of this now moving forward with the solar roof project. So when you look at solar, you look at batteries, and then you look at cars, like this company over the next 5 years could just do amazingly well.
It's an amazing story for Tesla alone, but at the same time, you mentioned the bigger picture, and that's what's going on around the globe, and everybody's watching coronavirus, and we have the sell-off that's underway today. What do you do with the portfolio? I mean, you're not just a Tesla guy, but you're, a wealth and investment management expert, and what are you advising clients? Have you been putting some in cash over time? It's my understanding you have.
Yeah, I've been saying this for 3 weeks. Our data was obviously much further advanced than the rest of the streets. And we've been putting out, I even started doing live streams just to try to get people to understand it was the time to take off risk. It's the time to be in gold and bonds right now.
But what about now today? What do you do today? What if I didn't do anything?
I haven't changed anything today. I don't think this correction is a 2-day event. I know the short-term traders hope that it'll just go away by the dip, but coronavirus is an incredibly serious problem for the world. I just got some videos from, of all places, Lebanon I was looking at, where they're literally wearing masks in Lebanon now, spraying people for the virus when they go into stores, and just taking all kinds of precautions all around the world now, other than in America. And so behavior is changing, and it's not for the better of spending, and we're just going to have to accept a slower growth over the short term. Hopefully it's the short and medium term and not the long term. And the truth is, this is a great environment for bonds and gold. And that's what we've been doing to offset the risk in our stock portfolio. And it's working marvelously today. It really, so if you're not working with an investment advisor, I highly recommend you do, because a lot of people have too much risk right now.
Right, I understand. Ross Gerber, great to see you. President and CEO,
Thank you.
Gerber
for having me.
Kawasaki Wealth and Investment Management. Always a pleasure.